Hello and welcome to day 3 at here at Node Investing Made Easier, the YouTube channel. And again, welcome back as we're doing a 5-day series on some various topics that pertain to the note investing space. And we're doing this, to recognize some of the topics that we'll be covering at the June 4th and June 5th Note Investing Made Easier Mastermind Group here in beautiful downtown Sarasota. And we have 30 spots that we're going to be holding for the mastermind. It just got announced over the weekend. We have 7 signups already. So it should be a very lively event. Looking forward to meeting with all my colleagues in the space and discussing various topics that are significant to us. So for today, we're going to talk a little bit about capital raising, and that's something that I'm actively involved with on a daily basis. And what's interesting is that the amount of similarities there are to deal flow generation. So as I wrote about the sourcing life cycle in Note Investing Made Easier, the book, a lot of that holds true with how you conduct capital raising for your fund or your entity in general. And so really there's a lot of parallels with how you form your identity for yourself, for your company, what your buying parameters are, who you are in the space, what people think of you based on marketing and branding you've put together, the building an investor profile in terms of how does the ideal investor look like that you want to approach, as well as having a sense for what does an investor look like that you do not want to take on your team. And that's really important to define as well. As about a month, 2 months ago, we declined someone who wanted to put in a large sum of money with our fund, Bequest Funds, because they were difficult to work with out of the gate before we even took any capital with them. So it just wasn't a fit, and we declined to take on the money. Some money isn't worth it. So and again, at the end of the day, they didn't fit that investor profile that we're looking for. So we just had to move on from that point. Also, too, everything that we do in terms of building outreach matrices and building CRM systems, all that's applicable to the capital raise front. So as soon as you know who you are, what you're about, what you need to raise, that's you also need to know who you need to raise it from, how do they look, and then you need to have a CRM system by which you're tracking all this, and of course daily rituals that help you keep on track as you kind of chip away with obtaining your goals. So when you're chipping away, I consider that those are daily targets that you have. So every day you have daily targets that are kind of moving you towards the lofty goals that you have set for yourself and your business. So these are all things that we'll talk about at the mastermind, as well as building a custom funnel by which you're going to take potential investors through, and hopefully at the end you'll be left with investors that are coming in. So how does that funnel look? Well, that depends on what type of capital you're looking to raise, for what type of deals. Are you approaching accredited investors, non-accredited investors? How is your entity set up? Have you consulted with an SEC attorney to find out how you need to structure the agreements? Are they JV agreements? All this needs to be kind of sorted out, beforehand. Now, at the end of the day, what's interesting is with capital raises that I hear a lot of individuals, they take kind of the pathway where they say, well, let me learn how to do note investing. let me buy some notes, let me get my feet wet, and then I'm going to go out and raise capital because I'm going to have proof of concept. And that's a good way of going about it. However, if you're really looking to build a scalable business, you really need to consider how you are going to have a capital raise effort, a massive action plan centered on capital raise, and how that needs to work in parallel to the deal flow generation, a massive action plan. So they're working in harmony. And that's very important because it's, if you go and you're just focused on the capital raise and then money comes in or you get soft commits or what have you, and then you go out and look for deal flow and you find that deal flow is not coming fast enough, well, that's going to irritate the soft commits that you got. So you really need to have some predictability with your business. And that's truly what, when you have a professional operation, you have predictability. So, we're able to predict, we're able to have a game plan that centers around our prediction that, let's say that we're raising $1 million a month and we're sourcing $1 million a month in purchased assets, and we're doing this on a continuous basis. So it's not always going to align perfectly. However, it's been tracking well because that's been our target. We have sellers that are already we're in discussions with on an ongoing basis. We're always in discussions with new investor prospects. So we're paralleling those two efforts, and that's really kind of the next level from just saying, well, let me learn how to node invest, and then I'm going to start, tapping on some people for capital raise. So, it needs to be part of the larger web that you're spinning for your company, and that's really what the topic we're going to cover heavily at the mastermind. And if you do it well, if you have that harmony we're speaking of between deal flow and capital raise, then everyone wins. And the sellers will have repeat deal flow for you. Investors that you bring on, the second, third time they invest with you is much easier. And you'll see that there's a snowballing effect. So I wish everyone well. It's Wednesday. It's a beautiful day here in Sarasota. It's going to be in the low 80s. So I'm ready to, it's 8 o'clock here in the morning, but I'm ready to cut out for the day. I'm not going to do that, of course, but I'm ready for a nice, beautiful day here. And I look forward to seeing you if you are signed up or thinking of signing up for the mastermind. I'll see you in June. Thank you, and until tomorrow.